The topic for today's video is general ledger. Your general ledger is based on the double entry rule, and the double entry rule says for every debit entry there must be an equal credit entry. So in other words, if you make a debit entry on one side of an account, there must be an equal amount on the other side of another account. The method I suggest you use when doing general ledger is as follows. The first thing you do is you head up your accounts and you fill in your plus minus signs. And you're going to use your accounting equation here to assist you. So your accounting equation is assets plus expenses equals liabilities plus capital plus income. Assets and expenses are to the left of this equal sign, so they get bigger on the left, which is the debit side, and smaller on the right, which is the credit side. Liabilities, income, and capital are on the right-hand side of the equal sign, so they get bigger on the right, which is the credit, and smaller on the left, which is your debit side. The other thing you can use is this dead click. The D here stands for debit. So the debit is going to be the plus sign for E expenses, A assets, and D drawings. And then the C stands for credit. The credit will be the plus sign for L liabilities, R income, and C capital. Now obviously if you're applying these rules, you need to know your types of accounts. So when you're doing this, you must know, if I say to you trading stock, you must know it's an asset. Loan, you must know it's a liability, and so on. So you do need to learn your types of accounts. Once you're done with that, you fill in your opening balance or totals, and the rule here is always on the plus side of the account. So those are what you start off your ledger accounts with, plus side of the account. When you're done with that, you post your CRJ and CPJ to the ledger, and then the last thing you do, which I'll come back to once completed this activity, is you balance or your total accounts. Okay, so if we have a look at this worked example now, instead of giving you an entire CRJ and CPJ, I give you the totals here for the CRJ, and I tell you here what's under sundry accounts. With the CPJ, I give you the totals at the end of the month here, and what's under sundry accounts. Alright, if you look here, we're given balances or totals at the beginning of the month. So I'm going to start off by filling in all these opening balances and totals. Alright, so the first account you come to is capital. Capital is minus plus. So on the 1st of March, you have a balance brought down, which is 120,000. You can remember it's BD because we are at the beginning of the month, which also starts with a B. Trading stock is next. That's an asset, so it's plus minus. So the balance on the 1st of March of 30,000 comes on the debit side. Your next account is bank, which is also an asset, so the balance is on the debit side, 46,000. Loan is a liability, which is minus plus, so the balance for this one comes on the credit side, 25,000. Then you come down to your nominal section. Your nominal section is used for your income and expenses. The first one here is sales, that is income, so the total brought down is 175,000. Cost of sales is an expense, so the total will be on the debit side, 87,500. Rent income is an income, as the name suggests, so that is a minus plus account, so the balance comes on the credit side. And interest on loan is an expense, so the total brought down comes on the debit side. So that completes step 1, we filled, and step 2, we filled in the plus minus signs, and we filled in the balances and totals. We're now going to move to posting our CRJ and CPJ to the ledger, and you always start under sundry accounts. Now when you're doing these postings, ask yourself, is the account increasing or decreasing? And once you've decided that, fill in the amount first. Thereafter you can put your details in. So it's important that you get the amounts on the correct side of the account. So if you look at the first one here, the owner increased his capital by 20,000. So he's increasing his capital, so you go to the plus side and you write 20,000. Now you can fill in the details. So that took place on March the 12th. The other account that's going to change here, when the owner puts capital into the business, will be bank, and it came from your CRJ. On the 25th of March, the tenant paid his monthly rent. If the tenant pays rent, the amount of rent received is increasing, so you go to the plus side and you record the amount. 25th of March was the date. The other account that changes is bank, and then your folio rather is CRJ. Okay, once we're done with the sundry accounts, we move to the totals, starting with bank. Now we are in the cash receipts journal, which means you are receiving money. So therefore bank is going to increase. Now in this case, lots of other accounts change because we're making entry in the bank account. So instead of writing rent, income, capital, etc., you summarize and you call it sundry accounts. So that's telling me that a lot of different other accounts will have the entries on the credit side for that 90,000. The next column we come to is sales. We've sold more, so sales is going to increase. So you go to the plus side of sales. The other account that changes with your selling price is your bank. Now when you get to cost of sales, it's a little more detailed or a bit more complicated. The first thing you need to do is you need to ask yourself, what is happening here? Now if you sell stock, your customers are taking that stock out of the business. So the first thing you must understand is that trading stock is decreasing because you've sold. So the 24,950 will go on the minus side, and that is your cost of sales amount here. Now when you sell stock, you record it in the selling price in the sales account. At the same time, in order to earn that income, we had to spend 24,950 on trading stock. So remember, you record the selling price, which is income, minus the cost price, which is your cost of sales, your expense, and that will give you your profit. So if you look at the double entry here, over here we debited the account. We're telling ourselves that the other account that changes should be trading stock. If you go up to trading stock, you will see that entry on the credit side here. With trading stock, ask yourself, is stock coming into the business? If stock comes in, it must get recorded on the plus side. If stock goes out, it must get recorded on the minus side. So when you sell stock, customers leave with the stock, so that's going to decrease your trading stock. Right, we're now done with the CRJ. We can do the CPJ. The first one here, on the 15th of March, 5,000 Rand of the loan and interest were paid. If you repay a loan, the loan is going to decrease. So on the minus side, 5,000, the date was the 15th of March, the money came from the bank. And this time your folio will be CPJ. Your interest on loan is an expense. You've spent more money on interest. So on the plus side, the date, bank is your other account that changes, and it came from the CPJ. Right, then we come to our big totals. Cash payments journal means that you're spending money. So the amount of money we've spent, and we've spent it on lots of different things, is 44,000. Okay, if you spend money, the amount of money left over is going to decrease. So on the minus side, you put the 44,000, and that's for a whole lot of different things. So you write sundry accounts then. Then we come to trading stock. If you're in the cash payments journal, it means you're paying for trading stock, so you're buying trading stock. So on the plus side of trading stock, you put the 21,800, the money came from the bank. Stationery is the next one, but we're not doing it, so we can ignore that. So now we have posted all the information from the from the cash receipts journal and cash payments journal to the general ledger. Now we come to the balancing of accounts. The method you need to follow here. Step 1 is to add up the plus side. Step 2 is to take the total across to the minus side. Step 3 is to subtract the minus side to get your balance. And step 4 is to bring the balance down to the plus side at the beginning of the new month. Right, so let's have a look here. If you've got entries on one side of the account only, then you simply need to add there. So you take the 120 plus the 20, which gives you 140. Please notice I don't write any details next to a total, ever. Right, then we come to trading stock, and trading stock has got entries on both sides. So step 1, we add up the plus side. Step 2, on the same line, you write the same total. No words next to a total, ever. You then take the 51,800 minus the 24,950, and that gives you 26,850. That is your balance of stock, and step 4 is to bring the balance down. So that shows you this 26,850, that's the amount of stock you should have. You can actually check that balance by doing stock taking. So you can go and count all of your stock and see if the balance is the same. If it's not the same, if it's less than you should have here, then obviously stock has gone missing, could be stolen, it could be damaged, etc. If they ask you how can you prevent this from happening in future, for theft you can put up CCTV cameras, you have security guards, you can check your employees before they leave the premises and so on. If it's being damaged, then you must take more care with the handling of your products. Right, then we come to bank, that's also got entries on both sides. Step 1, add up the plus side. Step 2, take the total across. Step 3, minus the 44,000, that gives you 92,000, and you bring the balance down. This amount here represents the amount of money that the business has at the beginning of April. When we come to loan, it's the plus minuses swap over. We still follow the same method though. We add up the plus side. We take the total across. We then take 25,000 minus your 5,000. That gives you 20,000. That is your balance brought down. If you think about it, that's the amount that you still owe for the loan. Once again, no words ever next to totals. For your nominal section, you just have to add up. So you add up the sales, you add up the cost of sales, you add up the rent income, and you add up the interest on loan. Once again, no words or details next to these totals. Okay, so if you're systematic with your general ledger and you know your types of accounts, you should be able to do quite well when tested on this work. Okay, that's all for this video today. Thank you.